All right, it is 2 o'clock. We're about to get started here with our Bonfire Chat series. Very excited today to talk about a topic that has been, stressing out a ton of people, a ton of business owners as we try to figure out what is the right answer here to PPP loan forgiveness, and what do we need to do? What are the timing, issues like? I don't know. I think the Treasury and the SBA have issued some 25 different sets of guidance. We finally have some answers, and we're lucky enough to be joined by Andrew Ruff today. Andrew is a partner of mine at TGG. He's a CFO. He is a former Marine, Naval Academy grad, and Andrew and I, believe it or not, have known each other since we were in grade school. So I hope Andrew's mom isn't on here to tell any bad stories about me. But I'm really excited to have Andrew on here because he has studied this stuff backwards, forwards, and sideways, and there's no one that I trust more when it comes to professional topics than Andrew. So the last TGG Bonfire Chat that we had was on the Main Street Loan Program, and we really dove into that and whether it's applicable and how we're doing it. What we're seeing is finally an update on that. Just a quick two seconds here is we're actually seeing banks start to lend on it, which is great. If you want any help or need any questions with that, please make sure and reach out to us. We're happy to help. The other thing that is really important today as we talk about the PPP loan forgiveness is that we have a loan forgiveness calculator on our website, and we've got a discount code. So we're giving 25% off for anyone who uses that in the next 24 hours. It's in the chat. You'll see it there. The code is Bonfire Chat, all caps. That is in the chat there so that you guys can see. Use that if you want to use that so that you've got a calculator there. In addition, again, just excited to have Andrew here. Real quickly, I'm Matt Garrett. I'm the founder and CEO of TGG. We are an accounting firm that is built to build accounting departments for small businesses to help business owners achieve their goals and have information so that they have peace of mind that they know they're making good decisions, and then for us to help them really along in that process. If you missed the Main Street Loan Program last week, we've got the recording up on our TGG YouTube channel, and I highly encourage all of you to watch it. Bruce Wright, one of our CFOs, was on, and that was a great one. Back when this CARES Act was passed, we put a team together that worked tirelessly every time the SBA or the Treasury put out some new guidance on this stuff, and we put this loan toolkit together. And it was a package that allowed people to kind of organize everything, an organizer of sorts. And with that PPP loan toolkit, we secured over 150 million in PPP funding for those people who used the actual toolkit, which is pretty neat because part of me having Andrew as a guest here today is to provide this TGG way financial thought leadership to your business. Then directly, TGG CFOs, we achieved over $27 million in PPP funding that was secured through Andrew and our other CFOs for our clients. So look, there's tons of weird stuff going on around this. Like I said, over 20 different interim final rules related to this. And our goal today is really to share the knowledge and advice with you so that you can get the most out of your PPP loans. At the end of the webinar, we're going to open it up to questions, and we'll have a slide with our contact information so you can reach out directly to me and or Andrew or anyone else if you need to. In addition, again, like I said, our team has created this loan forgiveness tracker so that you can track the funding and the forgiveness that you might get from the SBA. And once again, that code is in the chat. It's all caps Bonfire Chat to get 25% off. All right, let's get it started here, Andrew. Again, excited to talk with you here. We've got about 20 minutes to really kind of dive in, and then we're going to take people's questions, and then we're gonna keep moving. But,
fantastic.
Look, the guidance issued by the SBA is constantly changing. It feels like a constantly moving target. How do you and your team stay on top of these ongoing changes, and what is sort of the best advice you have for your clients?
Let me actually take the second half of that question first on the best advice, because I think in there is part of the answer to the first portion of your question. And look, I don't mean to lead off super cheesy on your on the first question you've given me, but it's the PPP. So basically the advice and what I'm following is PPP. You got to prepare for this. First and foremost, you need to participate. And third, you need to be patient. And so when we talk about preparation, the tracker is a very good example of making sure that you're appropriately tracking expenses along the way. A little different than income statement, but you're tracking it within some of the limits. And so you know where you stand on forgiveness given the broad rules. Something where our tracker, by way of example, would be really beneficial. Second thing you want to do is participate. Like a lot of things coming out from the Fed, and if all of us on this webinar rewind back to late March, early April, there's a lot of confusion. I'm a former Marine, so I can say it. Guidance from the government can be very confusing at times, and it takes a bit to digest. And so the other piece of this is participating in the conversations with your bankers. Ultimately, the flow is you're going to fill out an application. It's going to go to your bank to basically be underwritten the same way they underwrote the actual loans at the beginning. Once approved by the bank, then it goes to the SBA. So we want to be talking to our bankers. What do they want? What do they need? We don't want to give them anything more than, you have to give them exactly what they asked for, nothing more, nothing less. And then the third piece of this is, I think some of it wraps into tax planning, but we can be patient. This is not like the beginning of the program where there was a finite amount of dollars and everybody was rushing to get sort of their piece of that pie. This is a situation where we can afford to be a little bit patient. I would tell you personal experience, I rushed, was first in line at the bank. Underwriting through the bank was a challenge. They were trying to figure out what was going on and how to underwrite this debt. This time around, when it comes to the forgiveness, we can afford to be patient, and as the banks figure out how to effectively underwrite the application for forgiveness, personally, and full disclosure, I'm pretty comfortable letting someone else go through those pains. They'll figure it out. I'll do it.
So let me jump to a question I was going to ask you later, but I want to. Seems like it's applicable now, which is what then? What I hear you saying is sort of slow and steady wins the race. We had to rush to get the money, but on the back end, slow and steady wins the race to get forgiveness. Let's let the banks kind of work the kinks out, is what I'm hearing. So if that's the case, like, what are our deadlines? What are the things that we can't miss?
So
when do we have to file? How could we today? Do we have to file by the end of the year? What's the like?
Well, so there's a couple of deadlines to keep in mind. One is whatever your covered period is, whether it's the 8-week covered period or the 24-week covered period. The first deadline is that's the finish line in terms of spending appropriately in the right categories, payroll, the utilities, those sort of things, right? So that's your first deadline.
And just to be clear, when you say 8 or 24 week, that's because originally you had to spend all the money in 8 weeks, and then they revised it to say you could spend it over a 24-week period, which basically took us to the end of the year. So most people probably fell in that back after, or does it matter? Should they pick the 8 weeks if they could get it all in, or should they just try to take advantage of the whole thing? I
would take advantage of the whole thing. The advantage to going early is you remove the loan off of your balance sheet. But I do believe there are greater advantages to waiting. So you could have, the first deadline is what's my deadline for spending, right? Second deadline after that is you actually have up until 10 months after the end of your covered period to make the application to the bank. The bank is required.
The application for forgiveness to the bank.
For forgiveness.
And how does that work? If I make the application, what application do I fill out, and then where do I send it?
This is where we're participating in the conversations with our bankers. Now, the SBA has come out and published 2 different applications. One in EZ form. So if we think about the parallel I would draw is a 1040 EZ. if your return is relatively easy, let's say you're a sole prop and you took the PPP loan, you are likely able to fill out the EZ form. There's some rules and criteria. Like our tax returns, there is a more complicated 1040 that a majority of folks are going to have to go through and participate and complete. If you've prepared, that actual application process should be relatively easy. So you have 10 months to submit that application to the bank. Technically, the bank has 60 days. They can only take up to 60 days. So the lender's deadline is 60 days to make a sort of underwrite your application, forward it to the SBA. The SBA then can take up to 90 days to issue a formal ruling. And so the broad timeline, those are the maximum, the outside windows. You could apply early if you want to.
So let's make sure I understand this. So you're saying I could wait to the end of the year plus months, then I give my application to the bank. They wait, they're going to take 60 days. Then the SBA could take up to 90 days to give me the formal ruling on whether I got forgiveness. So in theory, I could be out 10 months plus 150 days. I could easily be out 450 days from the end of the year. It could be middle to late 2022 before I actually have this resolved. Is that what you're telling me?
True.
Okay, so that's why maybe it makes sense to go a little slower. Now, you mentioned the easy and the more kind of complex form. Are you thinking that most businesses are going to be able to file the easy, or that the other one is really or is it like a distinction? I know they said they're going to audit things over 2 million. Is it like if you're over 2 million, you have to use the other one? What are the rules on that?
So there are some technical rules around it of when you can file the EZ form. Basically, look, if you're self-employed without employees, you're filing the EZ form. If you did not reduce wages at the individual level by 25% and you didn't reduce headcount by 25%, then you can file the EZ form. It doesn't matter on the 8-week, 24-week window. EZ form requires less documentation, but those are, every situation has unique sort of nuances to it, but those are the basic rules. A majority of folks ultimately are going to fall into filling out the more robust forms,
the more complex form.
Yeah.
And so again, it's a conversation with your banker. Is what I heard you say early on. So
exactly, because the bank is going to be the one that ultimately says to the SBA, yes, this business, this entity, we underwrote everything, we looked at it, they have fallen within the categories, you should approve loan forgiveness.
So let's talk about the things that the bank might draw. What are things that might be red flags for the bank that they're going to say, I'm not sure if that's forgivable or not? And what are some of the big kind of pitfalls that you see out there?
So the easiest way to avoid any pitfalls is to go back to the origin of this program. It's the payroll protection program. The whole intent of the law and everything that Congress tried to accomplish was to protect payrolls. By electing the 24-week window, and I know that this 75-25, 60-40 ratio was scaled back through the revisions of this program, but if you're able to file an application exclusively on payroll costs, do it. Forget all of the other calculations around utilities or all of these other different potential options that you can have expended the money on. Ultimately, all you would need to do in that case is largely have a payroll register, your quarterly payroll tax returns that have been filled out in that time. And that's the easiest, that would be the ideal scenario. You show to the bank, we spent 100% of the PPP money within the payroll caps and all of these nuanced rules. If you go outside of that, Then you're going to go outside of that, like I'm going to include utilities costs by way of example. You're going to need to include a lot more documentation, the invoice from your utilities company, the proof of payment, all of these different source documents, and then actual remittances to be able to prove that you've qualified for those expenses. So a lot easier to just go with the payroll, follow the program. We protected payroll. We're only going to file on payroll expenses.
Yeah, so we've gotten a couple of questions here that I want to try to take from some of the members as we go through this, because they've got some stuff that I think is spot on here. And one is if I file my forgiveness app in week 12 of a 24-week covered period, does the cap on compensation get adjusted from the 46,000 to the 23,000? I think what he's really talking about is that top level comp, that senior level comp. And so how would you answer that one, Andrew?
In my experience and what I've seen so far is you would be fine. The caps wouldn't prorate down. It's an 8-week window or a 24-week window. The individual asking the question opted into the 24-week period. They qualified with expenses at week 12. They ought to be fine. Again, that's a conversation where I would really focus in and follow that the sort of second P that I said of participating. Ultimately, Andrew Ruff at TGG, as much as I would like to, I don't get to make this decision. We need the banker to say yes to the SBA. I would just run that coordination with the banker, but everything I've seen, it's worth the time and effort to make that phone call if we want to clear out that PPP as quick as we can.
So another good question on here is, Andrew, what if you were early, you rushed, like you said, to get the funding and you got it on April 22nd?
Okay.
Does this go to October 7th or December? I mean, 24-week period, did it extend from the time they did the legislation or to the time you got the money?
The time you got funded, the day you got funded, 24 weeks from the day you got funded.
Got it. Okay. And then the other one that I think is
so I'm sorry, and I don't mean to split hairs on this, but this is where it could become important with payroll cycles.
Sure.
Literally, I'm an accountant, so we have to take things literally. Not the day the SBA approved me, the day my bank account was funded. That's the day number one in your covered period.
Got it. Can you talk a little bit more? So that clarifies that. Actually, I didn't realize that. I thought it went all the way to the end of the year because that's what all the articles kind of, hint at. But the concern that a lot of business owners have that I've heard is these caps, and they're not being able to pay themselves a normal salary. What are some of the things that you've seen that can get you to full forgiveness without necessarily flying afoul of these business owner caps? And maybe you can explain the caps a little bit as well. Well,
generally speaking, the caps for owner's comp, particularly if you're in the 8-week window, is $15,385. If you go to the 24-week window, the caps are calculated $20,833.
In total?
Yes.
Okay, for that period.
Owner's cap, right? Health insurance for owners excluded, retirement benefits for owners included. So it gets into some nuanced things. But look, ultimately, I get pretty sensitive around the conversation of how do I maximize loan forgiveness on this? And usually what I like to do is to say, okay, let's rewind. If this is December 2019, Matt, you're a business owner, I made an offer to you. And my offer was a debt slice at 1% interest, 2-year AM schedule with no payments for the first 6 months. Would you take it? Are you interested in that debt opportunity? Yeah, I think a lot of entrepreneurs, I think a lot of business owners would be. See, yeah. My point is, to me, the first primary question in here and where I believe the focus should be is, how do I make long-term effective good business decisions? decisions that are profitable and decisions that protect my business in the long run. The cover period's going to end. Week 25 is going to, the sun's going to rise on that day. And so what I think is most important in these conversations, in these thoughts, is how do I make effective, profitable, safe business decisions for the long run? Now, when I've done that within the confines of these PPP forgiveness rules, then I want to maximize it. But to me, the maximization of loan forgiveness is the second question.
That makes sense. It's a great deal no matter how you look at it, but we still want to maximize what we've got. So I've got two other questions here before we start to take more audience questions that I really want to dive into. Is if I, let's say that I get PPP loan forgiveness in like the first, I'm in the 24-week window, and I get the PPP loan forgiveness in the first 12 weeks, right? But then after that, I have to reduce staff. How is that going to affect my overall ability to get forgiveness? Because I understand your point, which is make a good business decision, but that's in the past. I kept people so that I could use the PPP. Now my business is still down. I've got to let people go. What's that going to do? Should I file for forgiveness in week 12 just to kind of capture that moment in time? Or should I wait for that 24-week period?
No, if that is the good, effective business decision and provide safety, you are planning on making layoffs, I would go get forgiveness as absolute quick as possible. I would get the bank to say, we've approved this, we've sent it to the SBA. And then make the business decisions that are necessary.
So you really want to think
the SBA has come out and said, if your loan is under $2 million, we're not going to audit you. And all of what I have seen so far is that they will not come back retroactive on week 24 and say, hey, you were a 12-week filer. We want to see what you've done now.
So
it's unclear.
There's still a lot that's unclear on this, but I think that advice that I'm hearing you say is, listen, if you're going to make a reduction in staff, don't take the risk. Go ahead and file as soon as you know you're going to do that, because you're already eligible for forgiveness. Get that forgiveness sort of stamped and done, and then you're off to the races. The other thing that I'm struggling with here is the tax planning around this, because the IRS issued guidance that effectively, look, Congress said, hey, this is going to be a forgivable loan and it's not taxable to you. And IRS said, great, it's not taxable to you. By the way, anything you used it for is not deductible, which makes it taxable in effect, right? It just completely counterbalances. So if we fight for forgiveness and we get it and it's still non-deductible, we're still paying the same amount in tax. So it seems like that's going to have to be reconciled at some point. So without talking about the politics behind this and where we're going, what else should business owners be doing from a tax planning perspective to make sure that they're ready regardless of which direction this takes?
Well, I think from this issue around the IRS ruling and the deductibility, I think is sort of the really ticking time bomb in this, because where the entrepreneurs and the business owners are going to feel this is in cash, right? We get the loan forgiveness. We believe we have weathered the storm, however we want to describe it, and our balance sheets are relatively intact. We're good. We're moving forward, until they realize I had $1 million PPP loan, and coming out of that is now a $500,000 tax liability. And so one of the things that I would also say falls into this preparation mode and the participation mode of talking quite a bit with your CPA early this year, Q2, Q3, engaging in the conversations with your CPA. Close the year hard. And by that, pure play CFO comment, close the year hard. Let me give you a couple of examples, Matt. One, normal stuff that is best practices, we should be doing it every year, taking a good, long, hard look at AR. At the end of the year on 12/31, what AR do I need to make an allocation for bad debt against? What am I potentially not collecting? that creates a bad debt expense, reducing a tax liability. Let me give you another example in 2020 that has the potential to be very, very applicable to a lot of folks. General business community is talking quite a bit about, are we ever going to open offices again? My business has been functioning. It's been functioning well. We're in a remote environment. I'm going to keep it remote. Okay. You also have a lease that you've signed. And in most cases, a lease that was personally guaranteed by the entrepreneur or the business owner. What are you going to do with the lease? This might be a year where it would make a whole lot of sense, if that's the change in direction that your business is going to take, buy out the lease. Do it in the year that you receive loan forgiveness. You will have an expense that is a good, smart, long-term business decision for you to in part offset what is not, in effect, total loan forgiveness. So, you know, a normal idea in a normal year, another one to think about, but this is where a little bit of patience, some real deep focus on this, participation with your CFO, your banker, your CPA can really help to save your balance sheet and cash here moving forward.
Thank you, Andrew. Yes, this is the wonders of Zoom. I always do that at least once.
I was wondering if we were going to get through, like, you're on mute. How do I share my screen? It's a Zoom meeting.
It's a Zoom meeting. I do this at least once a day. Okay, so, but it's better than hearing background noise, I guess. Here's where we're going to go with this. If you've got any questions, a lot of people have put questions in, and I really appreciate that. If you have more questions, or if anybody else has questions, please put them in the chat to the panelists, and we will make sure that I get those questions answered. Right now, what we're going to do is before we take questions here, what I want to do is show our contact information. So if you want to get this PPP loan forgiveness tracker, you can get it off of our website. Again, use that code Bonfire Chat to get your 25% off discount code for that. But we've got a lot of great questions that I've seen up here, and I'm really excited to kind of get into the back half of this and start to answer some of these. So let's dive into this. And while we've got that up there, I'm going to dive into these questions. All right. So you talked about the $2 million and how those are, I mean, Mnuchin said they're going to audit all of them. I have no idea how they're going to audit that many. That's just a staffing nightmare for the government. But that's what he said, right? That's his kind of promise. So will the $2 million rule apply to forgiveness? And what can people do below 2 million and above 2 million, kind of to prepare for in case there is some sort of an audit? Because I've read a lot of stories about people. Clearly, I mean, our title said it all, right? Don't use your PPP money for a Rolex. But I've heard of stories of people, literally there's a guy in Florida that used it to buy a Lamborghini and got arrested, right? That's obviously not what we want people to do, but what can they do just to give themselves a little bit of extra protection in case it's perceived that they used it in the wrong way?
And I don't mean to, sort of go back in this conversation, but the goal of the program was to protect payrolls. Now, the application for forgiveness is going to cap. It has these caps in payroll, so we can't go out and bonus everybody $100,000 and call it good and we're fine, right? There's a natural sort of regulator in the application process. But again, the easiest way to do this, the basis of these loans was basically 2.5 times a monthly payroll. And you can opt into this 6-month coverage period. So we ought to be able to, I believe a majority of the folks keep operating, and the payroll, even if it got scaled back a little bit, not 25%, but a little bit, the timing and the basis of these loans is going to empower people to apply 100% by just showing payroll costs, and that would be the ideal scenario, right?
Well,
And so document retention in there, the payroll registers, quarterly payroll tax returns across whatever states you're processing payroll in.
the other thing that I've seen, and that this is very confusing to me at least, is these safe harbors, right? And they've got basically 3 safe harbors for how to get forgiveness, even if you have staff reductions. So can you talk through those for us so that we all kind of understand those? Because it's like, not every business is the same. Not every business was run the same. I mean, I got a question from somebody who said they were literally shut down for almost a month and a half. Restaurants, things like that. Do they get covered under this safe harbor rule? How does this whole thing work?
Yeah, and there's some additional documentation that's required in some of those sorts of things, because one of the things that you're referencing is you made a layoff before you got the PPP, and you offered for those employees to return to work, but they declined. Like I made a good faith effort to follow the program, right? Terminations for cause, legal definition of cause, basically lying, cheating, or stealing. That's another exemption under the, for this 25%. Ultimately, a lot of this all comes back to documentation, right? I referenced earlier, I used the utility bill example. You need a copy of not only the bill from the utility company, but you also need proof of payment, a canceled check, and you want to retain those. I would keep a very specific file that is, here is all of my PPP documentation. In those examples, simply the phone calls, I called this person on this date, they declined to return to work, I'm good. I would go a step further in all of this process and make sure that I'm sending out an offer letter by way of example. And this person didn't respond on the deadline, or they signed that they're declining the offer letter, those sorts of things. And that ultimately is the documentation requirements. I would go a bit overboard on them related to this, just because the stories about the purchase of the Lamborghini is going to be coming out, and folks are going to be making an example out of this. It's sort of, I don't think that's an unreasonable expectation of what the government's going to try and do.
Yeah, so the better the documentation, the safer you're going to be.
Absolutely.
This was a good question in here. So Congress is considering waiving applications of loans under a certain threshold. There's another person who put in here maybe under 150,000.
Yeah.
That's any idea on where that stands in the Congress? I mean, we've got the Democratic nominee now. We're moving into an election cycle. Any idea where we might fall on that?
No, so I think the missing piece in this guidance is, look, PPP loans under 150,000 automatic loan forgiveness, right? What hasn't been identified, and the accountant in me says, where's my source document for that? Where's the proof? I want it on SBA letterhead that says my loan number is forgiven. What is missing is the follow-on, the implementation piece of this. Again, I suggest a little bit of patience as they go through this. There are aspects like this 150K or less threshold for automatic loan forgiveness that feels like the SBA is back in the March and April timeframe. Decision's been made, and now they're focused on how do they implement that. But I would continue to just, you're going to be retaining these documents from an accounting perspective anyway, until I get that actual official letter. I would act, behave, retain documents as if it's not the given that the SBA has come out and purported it to be.
Yeah, and I would
assume a hedge on risk.
I would assume like regular document retention policies where it's 7 years, kind of IRS stuff, even after we got forgiveness, just to be safe, would be a good idea.
Absolutely.
So you say, Andrew, and I'm going to bifurcate this, but I just want to make sure all our audience members understand this, is patience is required if you're not going to have to do a reduction in staff after you've already used the forgiveness money. If, however, you got where you think you're fully forgivable and you know you're going to have to reduce staff, you probably want to file for forgiveness now. So like patience is really like this. It's really, is that the dividing line that I'm hearing you talk about?
There is a school of thought that patience is actually advantageous to you. In effect, the forgiveness of these loans is going to result in a tax consequence. The income won't, but the IRS has said you may not claim the deductions that you use to achieve forgiveness, you may not claim them on your tax returns now. You made the point earlier, Matt. Excuse me, the effect is this forgiveness is a taxable consequence. You also need to watch the states. By way of example, the state of California came out and said, by the way, the loan forgiveness on PPP, it's a taxable event. You may still claim all of your deductions, but it's a taxable event. And even for S Corps in the state of California, there's a 1.5% FTB tax on income. It's a taxable event. Now, classic tax deferment strategy, not tax avoidance, but tax deferment. The longer you wait for if I get to 12/31, the end of the year, and I don't have loan forgiveness yet, filing tax returns with all the deductions. My loan forgiveness happens in 2021. You'll have, and sorry for a technical term, but you'll have what's called an M1 adjustment on your tax returns for 2021 that will remove the deductible expenses. So you're not going to avoid the tax, but you can defer it a full 12 months, which...
Yeah, even further than that, because if you
depending on
your taxes on an extension, you're way out there. So yeah, no, I hear you. That makes
and depending on the scenario, that has a very significant impact on cash flows.
Yeah.
So this is really a situation, and when I talk about having a little bit of patience, Matt, you've known me for a lot of years. Patience is not. We generally don't talk about patience as a strength of mine. This is one of these situations where it's not just patience. The loan forgiveness is the thing. It's the action. But again, I said earlier, the crux of the question is, how do I make good, effective business decisions for the long term? Not just on my income statement, but on my balance sheet and with cash flows.
Yeah,
the 25th week is coming.
I really like that idea of tax deferral and getting forgiveness into 2021 and then keeping my money and the cash flow on that all the way up in through 2022. That's a pretty cool strategy. I like that idea. All right, we've got a handful of things. We're going to kind of do rapid fire on
okay.
And make sure that we get to all the questions. I'm not going to name this bank, but my bank, blank bank, sold all its PPP loans to quote unquote the loan source. Do you have an opinion about dealing with the loan source?
I have not dealt with the loan source specifically on PPP. There are several banks that are doing this. It's not out of the norm. And in my opinion, in my experience of having dealt with this with other loan processors, it doesn't present a problem for loan forgiveness, and it shouldn't. I would suggest you sleep well tonight and not.
Pretty standard stuff.
Yeah, pretty standard stuff.
Yeah, I mean, banks sell loans all the time. This is probably no different. They're just probably selling into a servicing company, it sounds like. Okay.
That's right.
Question. The PPP Easy application requires checking all boxes, including, quote unquote, the borrower did not reduce salaries or hourly wages by more than 25% for any, all caps, emphasis added, employee during the covered period, quote, end quote. So it doesn't sound like they're looking at 25% reductions on totals, but actually on each individual. Can you comment on that?
That's right. That's right. And I'm sorry if I wasn't, didn't make that clear. It is by individual.
That's good. I'm going to repeat this because I think this one's another important one. We've talked about it a little bit, but I just want to make sure we hit this. This is, do I need to wait for approval to make staffing changes, meaning like the forgiveness approval, or just until I submit for forgiveness? Because that's interesting because we still have 150 days to wait.
Yeah, potentially. And look, I mean, logic would tell me sort of the longer you wait to apply, the more efficient SBA is going to get. So the SBA has to rule by 90 days once they receive it from the bank. Over time, it'll probably,
but I think, yeah, I think the question though
get
is
a little bit closer.
Go ahead.
So there's an assumption of risk, right? In doing this, the week 12 submission to make staffing changes that are required to, for long-term health of the business. Without knowing the specifics, my recommendation, again, without the specifics, is I would wait until the bank says we've approved it and send it to the SBA.
Before making any staffing changes.
That feels like just taking that extra step.
Yeah, I would
notches down the risk that I'm assuming.
I understand that. I would also just confirm that with your bank. That seems like a weird catch-22 there. Okay, this is a good one. Business was closed from 3/19 to 5/15. Do I meet the safe harbor for 100% forgiveness? And I think, let me give you two different answers in this, or two different ways to answer this, because I think it matters whether or not the government shut them down or whether they shut themselves down. So
yes.
So if we can answer it both ways, again, just real quick, because we got a ton of questions to get through.
It does. I also think it matters what happened after 5/15.
Okay.
Did I bring everybody back? Am I operating, full strength, 24-week period? I'm falling within, I'm getting forgiveness because I'm going to the 24-week period. So there's a lot of nuanced sort of exceptions in there.
But the answer is essentially, if the government shuts you down, you're most likely under the safe harbor.
Yes.
If you shut yourself down, you're not necessarily under the safe harbor unless you can prove that you had to shut down for health reasons due to COVID. And that's one of those three safe harbor things.
Yeah.
This is a good one. Is forgiveness based on employee count, even if you didn't bring back the same employees? We laid off several high-paid employees and hired lower-paid employees for completely different positions. Our total employee count has gone up since the PPP funds were received. Will we be penalized in forgiveness for not bringing back the exact employees who were laid off?
It's head count.
Got it. That's great. Like that. I did not understand about the quote unquote caps on payroll. Could you please repeat? As a small business owner with only a couple partners receiving payroll, we thought that if we took the 8-week option, we would only be able to use about 80% of the funds. We thought under the 24 option, we'd be able to use the whole amount by just paying salary. Is that true, or are we limited in the amount we can pay each partner? So this is a single business with only 2 partners as employees.
No, if I'm understanding the question correctly, they should be fine. And they could even pay their partner. You can pay the partner more than this 100,000 cap, right? Which in the 24-week period, look, the owner comp, it translates to $20,833. You can pay somebody more than that. You're just only allowed to claim up to the $20,833 for loan forgiveness.
Cool. All right, that's a good one. I've got this one I think we've already answered, but I'm going to say it anyway. If we laid off one position and do not plan to replace it in the near future, but we actually hired additional employees for other roles such that our FTE has gone up, full-time equivalent has gone up on an overall basis, can we file the easy application? I don't think that's the only.
It's not the only criteria, but based on that criteria, yes.
Got it. This is an interesting one. I received an SBA 7A PPP loan for $99,000. The payoff amount displayed in my loan account is $99,360.25. The account details also reference a next payment amount of $5,571.36. if the loan is forgivable, why would there be a payment due? Have you heard about this? I have never seen anything like this.
No.
So I haven't seen anything like this. What I would suggest in this particular one is we can reach out to you if you'd like to. I know who this is, and we can reach out to you and take a look at what you got and give you an idea. But that I haven't seen that before, so that's new for me.
Mm-hmm.
I thought you might have seen it before, Andrew, but it's
no.
All right, this is another good one. If my loan is forgiven in 2021 and costs are in 2020, the IRS is saying that forgiven costs would not be allowed. Would I still be reporting the forgiven amount in 2020, even though it's forgiven around in 2021? And that was that tax planning thing that you talked about.
I would say no. And now I'm not signing your tax returns. Your CPA is, but my point is, at the end of 2020, you still had this loan. We think it's going to get forgiven, but in the world of accounting and particularly tax, we don't have a source document that in fact says it is. So you would report the expenses in 2020. Now in 2021, I used a technical term called an M1 adjustment. They would basically take out the expenses that you used, the 2020 expenses, they would take them out of your deductions for your 2021 return. So you're not going to avoid the tax. What you would do is basically shift it from a 2020 related tax into a 2021 related tax, deferring the tax consequence out 12 months.
Makes sense.
Personal opinions on where tax rates go, all of those sorts of things. But from a cash flow perspective, I believe it's a worthy, you want to go through the financial thought leadership of, does this make sense for us?
Got it. This is a good question. Is the interest rate for the loan is 1%. So for clarity, are we responsible to pay the interest, or is it also forgiven?
All forgiven.
That's the way I understood it too. That makes sense. What are the stipulations around any unused balance of the total loan amount? So let's assume that they're unused, which would mean also that they're not forgiven.
Right. So depends on the date that you received your loan, and it was an early June date. Forgive me for not remembering. I might have it in my notes here somewhere. But basically the terms, it's 1% amortized over 2 years and no payments for the first 6 months. The 2-year AM schedule, if written after, and it's a date in early June, I'm sure we can get it out here. The AM schedule moved to 5 years. So it would be like, I took a note for, whatever is unforgiven, and I'm paying 1% interest. My scheduled payments start after 6 months. Now, if you followed me on this, you actually have a 10-month window to make the application, but the payments are only deferred for 6 months. You don't need to be a CFO. Hey, I got a 4-month gap in there. What would happen? Would I be expected to make a payment, even though it's likely I'm going to get all my money forgiven? That disconnect in the timelines has not been resolved yet.
So I think we got a couple other questions here before we get to time. This is
Matt, I'm sorry, I just found it. June 5.
Thank you.
June 5 was that departure date. Before June 5, it's a 2-year AM schedule. After June 5, it's a 5-year AM schedule. Payment schedule.
All right, this is an interesting one. Will owner distributions, so this isn't payroll, will owner distributions taken after PPP funds were received be a part of the reporting when you're applying for forgiveness?
No.
So they're not, those aren't on the form at all?
No. Now, let's be clear, right? Again, I made fun of myself once already for this. I'm an accountant, and so I'm using the very literal term distribution.
Yeah.
As in distribution of earnings from off of the balance sheet, not the income statement. So a scenario, for example, where maybe some estimated tax payments needed to be made. We took a very normal small business owner behavior. I took a distribution to be able to pay taxes, right? That is, it doesn't help with PPP. It doesn't hurt with PPP. That is an outside of anything related to the PPP type issue.
Yeah. The only
What
thing
I would suggest
yeah, go ahead.
is to make sure, though, that those business owners, there could be a situation where instead of taking the distribution, if you're on the bubble of loan forgiveness, maybe this is a way that says, okay, it's a good business decision. I'm not going to take a distribution. I'm going to ramp up through payroll a little bit to get that money out of the business into me personally. Exactly.
Yeah. The only other comment that I would make on that one is don't be the Lamborghini guy. don't take such huge distributions that you draw attention to yourself. Take normalized distributions. Here's a good one. I like this one. Will the loan still be forgiven even if the company continues to be profitable during the covered period? Does profitability matter at all? No,
the profitability question is not asked on the application. No guidance is mentioned, losses, profits, nothing.
Good.
So the goal of the program was to protect payrolls, and for businesses that were fortunate to continue to operate, that's great for them.
Cool. If an employee had COVID but is now all right, are you expected to hire him or her back?
And I'm assuming,
and I don't think this isn't coming from an HR perspective. So it's not, I don't want to address anything related to, any kind of discrimination or anything like that. Just simply for the forgiveness component of it, are you expected to hire, let's say, the same employee back so that we can be on that way we're addressing it in a broader context?
And so I'm going to have to assume that the sort of thrust of the question is this: did I reduce headcount by more than 25%? Yes or no? Because that's a big determining factor in how much of the loan will be forgiven. It is based on headcount, not individual names.
Got it. Even though it seems like on that easy application, it is individuals as well that they're tracking.
I'm sorry, we're confusing things. 25% reduction in headcount versus 25% reduction in individuals' comp.
So both are factors.
Headcount is one thing. The individual compensation, that's the other question, right? Did I go out to my workforce and I say, across the board, everybody is taking a 30% reduction in comp? You would not be able to use the EZ form, right? If unfortunately I had to terminate 3 people in the sales and marketing department and hire 3 people in IT, my overall headcount didn't change at all in that scenario. It was a net change of 0. You'd be able to use the EZ form in that, and if that was the scenario. Super nuanced and very confusing. Even for accountancies, different measures you get nuance, but it's the way sort of the rules of the road are being designed on this one.
Yeah, so essentially, look, the application, whether it's the easy or the other one, if you're reducing headcount, or it's a reduction of headcount greater than 25% or payroll. Yeah. If you're replacing headcount, you don't have to worry about this one. But if your payroll goes down, you might be subject to some reductions in overall limitations on forgiveness amounts that we're looking at. All right, so we're at 2:55 here. What I want to do is make sure everybody we can answer everybody's questions. There's a bunch more in here that I'd like to make sure we do. So Andrew, would you mind staying on for just a little bit?
No problem.
To answer the rest of these questions. What I do want to do is make sure that that if you're going to fall off, no problem. Thank you all. Look, we really appreciate your attendance. What we at TGG are trying to do with these bonfire chats is give you timely and pertinent information, but not just information, not just the news, but actually actionable steps. Like I loved Andrew's takeaway on tax deferral. I loved Andrew's takeaway on some of the ways you could hire people back and what you had to hire back, what you didn't have to hire back. I loved loading up on some expenses this year to offset and defer into next year. So those are some things that we're trying to do in each of these, is give you real actionable takeaways that will make your life better. So again, we're going to get back into some of these questions, but I want to again tell you, if you want to use our loan forgiveness calculator, it's online there, and you can use that code Bonfire Chat, all caps Bonfire Chat, for 25% off, and that's valid here through the end of August. So feel free to go to our website, download that, and you can actually do a calculator yourself to see what you need to do and where you need to be to get the maximum forgiveness and give yourself the best opportunity to get everything forgiven. All right, with that, let me dive back into a few more of these questions for those who are still with us. We've gotten some great feedback, Andrew, and really appreciate your time on doing this. I want to acknowledge Katie in our office and Robert Rodriguez for putting these things together. These couldn't be done without them, and they are amazing behind the scenes, and really, really appreciate it. So for all panelists, there are links there into our forgiveness tracker, all attendees, and our Main Street Loan Toolkit if you want that. All right, let's answer a few more of these questions. Can you go over the tax deferral again, assuming the loan is forgiven and not deductible? That was the thing that we pointed out. Again, I don't understand why people aren't talking about this, because the IRS has made it really clear that whatever you use the funds for are non-deductible until they get it reconciled with Congress. That's where the rule is. So that means essentially, can you talk again about the timing? Because I think it really does give a lot of people a lot more cash, at least, regardless of where the tax law might go, new administration, same, whatever, at least you get the cash. So can you talk to us about that again?
Right. So, and this is a really kind of nuanced thing. So the law says when the loan is forgiven, it is not a taxable event. The IRS has come out and said, whatever expenses you use to justify, to achieve the loan forgiveness, you are no longer allowed to basically show those on your tax return. So in a normal year, $5 million of revenue, and I pay occupancy expense and all of those things, to include $2.5 million in wages expense. If I used $500,000 of those wages expense, $500,000, to achieve loan forgiveness, I'm only allowed to put on my tax return not 2.5, but $2 million.
And just to make sure we're on the same page with that, what you're saying is, because you use the PPP funds to make those payments for payroll, you couldn't deduct them. That's what the IRS is saying.
That's right. And so what does all of that mean? Basically, it means that you'll get a surprise on normally, let's assume you're K1s, you'll get a tax surprise as a business owner. That's the equivalent amount of the loan forgiveness that we're not expecting.
You're shifting. And so
you're shifting.
Go ahead, Andrew.
So where this becomes important is when do you pay the taxes, right? There's a time value of money that we all appreciate as business owners. If my loan forgiveness happens in 2021, well, I'm ending 2020. I still have this loan. I hope it's going to get forgiven. I did everything I could to achieve forgiveness, but nobody has, I don't have the letter from the SBA. Therefore, I'm ending the year with the loan on my books, and I'm not taking that income. When I achieve it in 2021, then my tax consequence would happen in 2021. The benefit being, I just bought myself another 12 months of cash on the balance sheet to be able to pay that tax liability. Potential number of risks that happen in there. my personal opinion, and not to get into politics, but there's election risk that's going to happen, and there's a possibility that tax rates go up in 2021. Individual business owners need to judge their own sort of appetite for that risk. The other side of this is if you take the loan forgiveness in 2020, it may be a year to take some expenses that you weren't planning on up front. The example that I used is if you're going to downsize offices, if you're going to turn your company into a virtual company, for example, buy your way out of the leases in as quick as possible. You cut your occupancy costs, and you might be depressing profitability for 2020 by incurring this large expense. Drop it below operating income for, you know, valuation purposes and all those sorts of things. But that would help to increase the expenses that I can deduct on my tax returns, minimizing that tax consequence. Very sort of nuanced, and I get it. It's tricky in here, particularly to try and do it over a webinar. But this is a year in particular where look, CFOs and CPAs, good ones, are going to make their their bosses some money if they really think through this long term. Don't just focus myopically on loan forgiveness. You want to look big picture with this as well.
Yeah, that makes sense. All right, we'll take a couple more questions, and I think the rest of them that I've seen in here we've pretty much gone over pretty extensively. So this was a decent one. If it turns out you did not need the PPP to protect payroll, rather than pay back the loan, could you donate the funds to charity and avoid the tax consequence that way?
Ooh. Potentially.
I think as long as you expense to offset it, it's going to be virtually the same thing. Because if it's not forgivable,
yeah,
that comes to you, and if you have an expense, that'll offset it. It's kind of the same thing. I think you've got to be careful with charitable limitations and charitable gifting. But you know, if you did some sort of marketing expense, something that's a clearly deductible expense, you'd probably be fine.
And I think you would want to talk through that transaction with your tax preparer before. Do I do it personally? Do I do it through the business?
That's a really good point.
Do I split it?
Where do you get the big benefit? Yeah, no, that's a great point.
Exactly. So it's a really interesting idea. With a philanthropic heart, I love it. And I would there might be some legs to that idea, and I'd engage with the CPA and tax preparer to go through that.
Cool. Last but not least here, Andrew, and I think we talked about this, but I just want to hit it home. If you reduce payroll and headcount more than 25%, can you make it up within this 24-week period so that you get to full loan forgiveness? Is I think what the question's asking.
On the compensation side, you can, right? Because it's not asking you what did you pay per pay period, the application. It's saying over the 24-week period, what did you do? The headcount number. Katie, can you capture for me who the individual that asked that question? I believe you would still run afoul. I'd need to do a little bit more research. I think you still run afoul of the 25% headcount because they're taking averages. They're taking averages by pay period to figure out what your headcount was.
I think the other challenge, that the wrinkle in this, Andrew, that you point out is we talked about it before, is these 3 safe harbor areas. They may apply or may not apply. And so I think the key is if you've got those situations, you've got to make sure you're working with your banker, your CFO, to really understand, can you fit in one of those safe harbors, and or what was the reason for the reduction in headcount? There was one quick other one.
That's right. And I'm sorry, Matt, but let's also, one of the things I've sort of been waiting for an opportunity to discuss in here too, you know, these 25% reductions the way we've sort of had this conversation today is it's binary, loan forgiveness or not. That's not the way the application is actually working. You can have degrees of forgiveness. And that might be a situation that would apply to the question that was just asked. It's not all or nothing. There will be rulings where the SBA comes out and says, you've achieved 60% forgiveness. You still owe on the amortization schedule and the terms of the note 40% of the principal, but we've forgiven 60% of the principal. So there's degrees of forgiveness in here as well, which I think is an important point, particularly relative to that question.
It's a really good nuanced point that we really hadn't brought up today. So that's great. The last question that I want to answer, and I think it's a one-word answer. We received $450K of a PPP loan, but our business was still operating normally. We can still qualify for forgiveness, right? We didn't.
Yes.
Yes. Perfect.
That's your one word. Yes.
Well, Andrew, we have had you in the spotlight here for over an hour. Very much appreciate all the expertise and the energy you put into researching all of this stuff. Very helpful. I know I've gotten a lot of positive feedback from the panel, from the attendees, and just really enjoyed our conversation. In fact, I learned a couple new things today that I'm really excited about taking away and sharing with other people as well. So again, thank you very much, Andrew. Thank you to all of our attendees. Please look for our next Bonfire Chat coming up here in a couple of weeks, where we're going to start to explore. We don't know what it is yet, but we're going to start to explore whatever is the hot topic of the moment. And we're going to come up with to-dos, things that you can use in your business to make money, drive value, drive safety, overall make your business better. So thank you all for attending. We appreciate it. And we will see you all next time.
Thank you, Matt.
Bye, guys.